All right, we had a typical Monday today. Very low volume, very small range. We kind of had a pretty good bullish move intraday, relatively speaking, and then it pulled back at the end of the day to where we ended up finishing flat. So about as a nothing burger of a day as you could possibly have today. Obviously, it was not. There's things going on in the background among individual stocks, especially in the AI space, as there continues to be big moves among those stocks as well as in Bitcoin. So we're going to take a look at some of those bigger movers today and what's really driving the market today. Take a look at some of the sector rotation, like we always do, to see what that's telling us, especially coming off of an overbought cluster on Friday in the major markets. So we'll take a look at the Magnificent Seven and the bifurcation that's occurring inside of that segment of the market. And then our trade idea of the day is actually in the financial space. Financials had a really good move today. We'll talk about how to trade that. We already have a couple names in that space already in this particular category. We'll put another one on here for today with a different type of option strategy, or different option than what we've used in the other two. So let's go ahead and get started. Today is Monday, March the 4th, 2024. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, before we get going too far, I invite you to subscribe to our YouTube channel with this icon here, the red subscribe button down below. Click the thumbs up icon to like our video. Comment on anything that stood out to you today. Join our website at MarketScholars.com for free. Follow me on Twitter for more content between the videos, and join our Market Outlook Facebook group that we've created. If you're watching us on our blog here, check out some of these other things over here on the right, including our Market Outlook live video, where I take a look at all the trades we've done and previous Market Outlook videos to see whether we should stay in them or not. We actually got out of one today, put on today's trade already before the market closed. Come down to the bottom, click this heart. It opens up this tab, hit that like button there. Click this thumbs up icon, does the same thing here. Click that like button. Again, the more you do that, it helps get our content out to all of our followers on those platforms. That's all we always ask. So thank you to those who do that day in and day out. Our goal is to get to 100. Those who don't do that, you can do it right now while you're watching with one or two really easy clicks. All right, let's start off taking a look at the S&P 500 with the market forecast indicator. You can see we had a cluster on Friday. We had all four lines, for that matter, up above the 80th percentile. In fact, you pretty much almost had all three of the other lines above the 90th percentile. Your near-term line was at the 88th, and the momentum line was at the 90th. So pretty strong cluster, to say the least. And again, not a cluster which is typically pretty bullish when you are just starting a new run, or a cluster like this when you're coming off a kind of a little bit of a convergence period and you re-engage a new one and you're only like a month or so in. This one we are 4 months in almost into this near-term rally. Not coming off of a low point like here. See, getting a cluster here or getting a cluster over here when you first crossed over, those are really bullish or good opportunities. This one would have been a little bit long because we were a couple of months in, but being almost 4 months in is a pretty mature trend to have a overbought cluster. So it kind of suggests that we might be actually getting overbought to this point. But today's with the decline, you can see the momentum line dropped. That's not surprising. The near-term line still stayed in the upper reversal zone. If you look at the NASDAQ 100, which is obviously one of the bigger drivers of this, it has a very similar pattern. Near-term line, a momentum line dropping into bearish territory. Near-term line still up in the reversal zone after. It also had a cluster. The Dow Jones Industrial Average, you see, has the intermediate line still above market sentiment, though both are falling. But, again, above the 80th percentile, you're still okay. Obviously not as strong here lately. The near-term line, barely above the 80th percentile and down just a little bit. The momentum line, again, into bearish territory there. And then finally, your Russell 2000, which was barely down at all, but had gapped up more. And it's got the potential of a near-term divergence showing up here with a potentially lower near-term highs, but obviously already higher highs here on the index itself. The intermediate line getting into up to extreme highs up above the 90th percentile, like all the rest of the indexes. But the momentum line, you notice, never did get into the reversal zone at all, and already has fallen down. So a little bit of a red flag, just a little one. Again, not very much of a move today, very below average. So, but still, it's a very strong trend too. But just a little bit of a red flag. When you look at some of the other indexes, Like, let's look at the 10-year yield. That's been a big driver here. You can see it was up today about 4 basis points. The intermediate line still up above the 80th percentile. Your short-term sentiment still oversold. So you're still looking for any kind of bounce that might get back up above the intermediate line, because you would assume that by the time the near-term line does make it up here, if it does, the intermediate line is going to be below the 80th percentile by the time that happens. So now the question will be, are we going to bounce off of this, kind of like some of these other bounces, and take off, or are we going to break through, right? As of right now, you would anticipate that we'll bounce off of that. The dollar index formed a bull tag today, so we dropped below the 30-day moving average. The intermediate line still, though, above its rising market sentiment line, and short-term sentiment is in bearish territory, slightly oversold on the momentum line. And then finally, the other big major factor here has been commodities, up slightly today, though off of its highs. The intermediate line out of bearish territory, so you have light green shading, a green line. So we're kind of trying to get going here. Of course, the biggest factor is crude oil. Crude oil really down today quite a bit, down 78.76. The short-term sentiment is down, but your intermediate line is still in the reversal zone, so we're hardly breaking a trend here yet. Of course, the big news is Bitcoin, and again, just moving just rapidly here. Another one of those big moves that Bitcoin tends to do to the upside. Now we're up to above 68,000 today. The intermediate line still above the 90th percentile, having got that cluster earlier. Closing above that long upper shadow today, and then now closing up 39% up above its 30-day moving average. That's the highest of the past year. Not the highest of the past 5 years, though the second highest, right? Or pretty darn close to, if you look at. Obviously, we had that big move there at the end of 2020 during the reopening trade, when all the Robin Hooders were buying Bitcoin and hodling Bitcoin up there. And you can see, too, we also had a pretty decent move up above the 30-day moving average, about 40% or so, back in 2019, when it was making a run from 4,000 all the way up to over 10,000. So, and then started a multi-year base there, and started a multi-year base here before coming down. So we'll see if this one also ends up starting a multi-year basing pattern. We're very, very close to the high point that we had at the end of 2021, and completely reversing this decline that we had down to 15,000 in October, November of 2022, when we were in that risk-off mode. Of course, ARK Investments is a big proponent of these types of investments, and you can see it's been relatively bullish. Intermediate lines above its market sentiment. It's above the 80th percentile, though your near-term line has dropped down below. So relatively bearish right now until we can get a bounce back up into the upper reversal zone on the near-term line. So we're in kind of slight pullback mode there, and unlike Bitcoin, is nowhere near its high point yet, and is still a lot closer to its low than it is its all-time high there. Let's take a look at some of the other weekly candles. You can see again a higher high again, a higher Hakinyashi close, a rising PPO, everything very bullish. So we're still converging down here. The candles are getting slightly smaller, but nothing too concerning. 3 green arrows across the board, all across the board, except for the Dow. You're still slightly red on the MACD, but pretty much across the board, 3 green arrows, especially down there on the Russell 2000. You're above moving averages, the 8's above. I mean, everything is looking really good here. All the moving averages are in alignment, and they're all going up. Now the 30 is back above the 50 on the Russell. So everything is going up and in the proper alignment there for a bullish trend. Looking at some of the other oscillators here, you can see we're still above 40. Again, it's not common to be above 40 at all, much less stay above 40 for very long, and we are still below 20 down there. If you look at IWM, it's above 30 now and below 20, so its ADX is starting to rise. The beginning stages of this trend here. The Ichimoku cloud is strongly bullish. We are now up above, did we get above 20? No, we're at 19.77, so we're pretty darn close to getting above 20, but not quite there yet. Of course, the Qs is driving a lot of that with kind of the double-headed mature bullish trend here, and IWM is just getting started, right? It's finally crossed the threshold for an intermediate strength trend. Positive rate of change, prices above both lines, greens above the blue, and everything rising. Looking at the RSI and the CCI, you're back below 70, but you're still above 60 on the RSI, and you're still above 100 on the CCI, so very strong levels there. The weekly RSI is still way high too, so very, very strong indicators here. The Russell 2000, remember, has been playing catch up, is above 60. The CCI, a little bit of a divergence forming there on the weekly CCI, but you are at least above 60, above 100 on there, so you're at bullish levels on both of those indicators too. And then finally, after being up above the upper band on Friday and the upper Keltner channel as well, with that cluster, we closed, we're still in the upper quartile, pushing up, again, in 93rd percentile, and still above the upper Keltner channel. So very good pattern there. Your IWM is in the upper quartile, hasn't broken out. Like we kind of broke out earlier above the bands over here and slightly above the Keltner channels, but now the bands themselves are outside the Keltner channel, so we're back to green dots here. So the S&P, remember, did not get this little decline, bearish momentum, but the Russell did, and now the Russell is starting a new bullish trend at the same time that the S&P is getting a cluster yesterday, Friday, with the close above these bands at the end, or at least in the midst of a almost 4-month-long run. So makes you wonder again, the staying power that this trend will have if the Russell's able to really, push it higher. We did get a new high at the end of the day today before pulling back. Small range, a very small range, as you can see there. So we're still at 100 there. That low is going to move up to here pretty soon. The range is, back below the 5% mark, so pretty small range there. Obviously, as I showed you, the range was really small today, 2.2. The volume was really, really light, very light, like extremely light down there. So your volume is down to its 50. The average of the volume is down to its 52-week lows, and the ATR is back down to 81%, 0.81 of the price, 81 hundredths of a percent relative to the price right now. So very, very small range, very extreme volume. That's typical of a grind, right? We're in a strong bullish trend, and it's grinding higher, and it's also kind of reflect, or at least confirms, that the VIX is just really low. The VIX is down below 90%. It's at 13.5. You're still correlated with the VVIX, which is up today, but still below 80%. So it's still extremely low. So again, this low VVIX is still, showing that there's an expected move higher on the volatility index if that correlation stays together. You can see you're still kind of flirting after dropping pretty low below relatively low below the 50-day moving average. Kind of similar to these other little bottoms. Today getting back up to it, and we'll see if we cross back up above it. The 200-day continues to really drop below 15, extremely low itself. So again, it's not just the VIX, right? We might think, well, the VIX is, I know it's really low, but it doesn't really matter anymore because of whatever reasons we come up with. But the reality is all the other measures, whether it's Bollinger Band width, whether it's the ATR, the relative ATR, these are all really low, relatively speaking. You can see on the weekly chart that the Bollinger Band was actually really high. If I were to take off, let me take off this expiring cone here, and then let's take a look at a little bit more perspective. So again, if you follow my cursor, a lot of these other peaks on the bandwidth came during declines on the market. The only really one that was about as high, that got about as high as it does now during an increase in the market was back in 09, when this move right here after we kind of came in a little bit and rallied back up. That one, but every other peak here that's about the same level as this bandwidth all corresponds to significant drops in the S&P. We are up above. We are here up in the upper quartile of the weekly bandwidth. But again, goes to show, even look at like a 2018, the bandwidth there, which also increased on a bullish move, if you follow my cursor all the way to the right, that's the size of the bandwidth. I mean, that was a good move, but 2017 was a strong move for quite some time. This has been a very strong move in a very short amount of time, according to this indicator. And so it's going to be interesting to see what happens as this line, because you see it does go back down. So as this line does come back down, how will the markets behave? Will they stay in this kind of a bullish mode, but kind of more of a convergence mode, where the MACD gets below its moving average, the histogram turns red, but we still stay above the 17? You can see that can happen here for quite some time. There was quite a bit of convergence here for most of 2021. After that big, strong momentum surge, you got above it, but for the most of the rest of the year, it was below its moving average, but you stayed above the 17 until it finally broke, and we had that decline there. So we can stay in a bullish convergence mode, where we're still kind of rising, just at a much slower pace, obviously, than what we've seen. And that makes sense, that this is one of the stronger 4-month paces of the market that we've seen, right? If there's a lot's been made mention of that, and I've tweeted out about that. But again, like this move is very representative of a move coming off of a major correction low, like 1987 or 1998, or the COVID low point, or an actual bear market low point. And obviously the fact is that this was neither a correction low or a major bear market low. It was just a very typical pullback. Actually, it was kind of less typical than normal because we didn't have very much volume at the lows. We didn't have very big ranges at the lows. We didn't have a washout move at the lows like we typically do at the end of any normal pullback, any major volatility move. It was a very typical pullback that was actually less volatile than normal. And then, of course, boom, a 4-month move that was acting as if that's March 2009, or that's the COVID low point, right? Where, obviously we did have some major washout moves at the end of those moves. All right, now let's talk about what's driving this price action. Again, you can see U.S. equities, even developed markets, kind of pulling away from everybody else over the last 3 months. But again, let's just look at today alone and see what happened here today. And you can see that gold, again, took off. In fact, this is the last couple of days in a row. If you go back to last Friday as well, gold also had a really good day on Friday. So it was like 2 straight days that gold has taken off up 3.5%. Real estate up 2%. The dollar was down a little bit, but still, like, that's a pretty strong move for a minor weak move in dollars. And you can see bonds were actually up, so yields were down, but yields rallied a little bit today, not very much. Then you can see U.S. equities did okay for pulling back at the end. You can kind of see emerging markets and developed markets kind of hanging out there. But big move in gold prices here this past few days. So if you take a look, again, just at today alone, and if you take a look at a chart for gold, you can see again the breakout here, like strong. The intermediate line crossed above. We got the bear tag right there. The intermediate line crossed above market sentiment over here. We started to get dark green shading and a green line. And then really over 3 days, boom, 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 gold has taken off. So let's go. In fact, we could probably go back now and take a look at this, including Thursday. And again, there's a little bit of a rally. Now, gold didn't really outpace everything, but again, over 3 days, up 4%. I mean, that's got to be one of the stronger moves in gold over a 3-day period that we've seen for a while. Here, let's go over here to the rate of change chart and change it to just 3 days. 3. And let's take a look at gold for a 3-day period. 4%. So you can see there, if I were to zoom out 5 years, it's not the highest, but you can see it's up there, right? You can see a pretty decent move there coming off of that low point. Here, let's throw this line on here. 4.07. So you can see right there, coming off of that low, here coming off of a low point and starting kind of a new trend. Here it was the peak. We already had a low come off of a low, and we kind of hit a peak there. And then you can see over here again, you hit a peak at about this level, whereas over here we came off of a low. That was your COVID low with a strong move, and that was a peak. Over here was also a peak for a few weeks at least, kind of in the middle of a trend. This one looks like we're kind of breaking out of multiple highs. Looks like we might be closer to starting a new run, kind of similar, coming off of a low point, similar to some of these others. So as you saw, a very strong move. You can see the weekly chart for gold taking off to the upside, which is kind of interesting because, again, gold's not something that typically would do well in a risk-on environment, but very strong weekly candle there. And as you saw, the market forecast was turning bullish with all the line. In fact, you almost got a cluster today that fast. But short-term sentiment strongly bullish. The intermediate line is probably a day away from crossing into the upper reversal zone. Again, you would think that would mean that the dollar is really breaking down, but as we saw, the dollar is not really breaking down too hard. We already saw its market forecast. But if you look at its moving averages here, we're still sitting right at the 200-day moving average, kind of ready to bounce. And same thing with the 10-year yield. We hit that 30-day moving average and the 200, and we kind of bounced up to 4.2%. And it looks like the MACD might kind of stop here and bounce up itself. So all these factors don't really suggest a high price of gold unless you consider, again, what's kind of going on, kind of an anti-dollar fiat trade, and we're really gaining ground in Bitcoin and gold and anything that's not necessarily paper currency, and gold might be getting caught up in that. You can see silver also kind of breaking out, getting above its 200-day moving average, but you see still kind of stuck in a range where gold was kind of breaking through. As if you see the futures contract kind of breaking through a range and getting up to new highs with really strong volume on the futures contracts for the past couple of sessions here. Let's take a look at what I wanted to look at was a sector rotation. Let's take a look at the sector moves first, and then we'll take a look at how the Magnificent Seven are doing here. Here is how things performed here today alone. Utilities and real estate, your top performers. Those are kind of risk off category. Interest rate sensitive sectors as well. On the downside, technology did okay, ended up down, slightly outperforming SPY, but XLC and XLY were both really negative, and energy really dropping down hard, kind of diverging away from materials, which is kind of interesting there too. So if you take a look at the 12 grid for these, again, SPY is up here in the top left quadrant. After getting that cluster, you can see XLK also got a cluster, XLY, XLC pulling back, XLE pulling back, materials still going up to new highs along with industrials, financials kind of flattening out there, though a lot of financials really broke out today. We'll take a look at one of those stocks today for our trade idea. But utilities and real estate really starting to ramp up and catching up. Again, these are kind of more safety sectors down here at the bottom, and these are more cyclical areas at the top. Within the Magnificent Seven, again, a lot of those sectors at the top kind of fit these 12 stocks here. I mean, look at Apple, dark pink shading and a red line. Look at Google breaking down pretty hard. Tesla, and remember, Tesla and Amazon are the two that are kind of more associated with XLY. Not looking so good there. Netflix and Meta and Google are all the sectors that are kind of more focused on XLC. They're struggling. Microsoft's been sideways. Apple's been down. Cisco had been down before kind of a breakout move today. Adobe also had been down before this little rally, but it's pretty much just a small segment. Broadcom, Nvidia, AMD, all of these three stocks seem to be the segment within this Magnificent 7+ area. That's the only segment that's doing pretty well right now. That's keeping the market from entering its own intermediate decline that Apple is already in and has been in for now nearly 3 months, that Google has just started to be in, that Adobe has been in, that Cisco has been in, that Tesla has been in now for almost 3 months. So you're looking at almost half these 12 stocks are actually in intermediate decline. And obviously the other half isn't, and a small segment of that half is the one that's kind of driving everything right now. All right, that takes us to our trade idea of the day, and it's on Morgan Stanley. As you can see, a nice, good breakout move today. Really sideways for a long time until today's move. Big range, more than double the average. Big spike up. The short-term sentiment getting up to higher levels. Intermediate line rising above the 50th percentile, almost above the market sentiment line. Dark green shading and a green line there. If you take a look at the weekly chart, you can see we have we're in a bullish golden cross environment anyway, with the 10-week above the 40-week. They're both rising. The PPO is rising. The gap between them is getting bigger. And you got a pretty bullish candle this week so far with a green arrow. So very good, good bullish pattern. Obviously, you have 3 green arrows on the stock. Let's take a look at it here on this chart here. You obviously have 3 green arrows. There's all 3 green arrows there. We haven't had 3 green arrows for a while. Briefly there, but now we do. And a big surge in volume today. So nice opportunity here. If you take a look at the 2-line version of the chart, we have eclipsed the 50-day moving average today. Actually kind of gapped up above it a little bit and definitely moved away from the point of control. MACD is positive, stochastic's positive. This is what the weekly version looks like. Also getting above, the 8-week moving average, also getting above the point of control. Things looking really good after a little bit of a pause on its earnings, but kind of breaking out here today. Looking at some of these other oscillators for Morgan Stanley, you can see breakout patterns above 30, below 20 down there, with the ADX really low and turning up now. The Ichimoku cloud, we have broken through the cloud, outside of the cloud now to the upside. The rate of change has turned positive. Your green and blue lines are up. You have almost a weak bearish. You actually did have a weak bullish trend developing before the late little pullback at the end of the day today. Looking at the RSI and the CCI, you can see above 60, above 200. Big, strong moves. You're already above, we already hit above 100 on the weekly CCI, but it's jumped back up above 0 here after getting slightly below that. So really good opportunities there. And then not surprisingly, you're, had closed well outside the upper band and the upper Keltner channel for that matter. The bands themselves are inside the Keltner channels, but again, positive momentum developing. Probably takes another day or two for them to break out. So really good opportunity. So what I did here, I decided to do a long call at the money, long call trade. So we bought the at the money, put a stop order at 50%. This is what it looks like here. $500, about $425, I think. We have $420 of risk since we got in at 440. We put our 50% stop. So about $440 of risk total if I get stopped out on both contracts. And then again, if we were to get up to by the end of, even if we were to get all the way to May expiration, there's a almost $1,600 reward if we were to get that high. So really good 4-to-1 reward to risk opportunity if it were to take off to the upside. So we'll see what ends up happening, but nice, good. Looks like what may be the beginning of a pretty decent move here with today's breakout. All right, well, that does it for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forum. Open up any new thread with any questions or comments you have. Reply to anybody else's thread, and let's keep this conversation going in between videos. Again, thank you very much for watching. Remember to subscribe to our YouTube channel. Hit that thumbs up icon. Comment on the video. Join us at MarketScholars.com for free. Follow and like me on Twitter and Facebook as well. Have a great rest of your Monday night, everybody, and we'll see you all next time.